it's good to have some exposure to non-Bitcoin because as we know, Bitcoin can go down for quite some time. And historically, it's been a couple years, but if you bought in at the peak of the market, you're just now getting back to your cost basis, and November of 2021.
Hey guys, welcome back to the show. Today I'm here with Bitcoiner investor Fred. How are you doing today?
Doing great.
Thank you so much for doing this with me. I really appreciate it. I really follow your Twitter account. It's one of my favorites actually. And guys, as always, in the comments down below, you will find Fred's Twitter account. And I wonder, how was your journey into Bitcoin? How have you discovered it?
Well, somebody asked me, when did you start studying Bitcoin? I said, I started studying in 2013, but I was a very bad student. So my journey started as I bought Bitcoin in 2013 and I sold Bitcoin in 2013. So, I doubled my money and I thought, hey, this is great. This is a good thing I got out of that scam. And then I spent really the next 4 years very skeptical about Bitcoin. In 2018, a friend of mine had started this blockchain called EOS, and this guy, Brock Pierce. And Brock was actually one of the very early Bitcoiners and chairman of the Bitcoin Foundation. And, we're friends from LA. And so he had started this EOS blockchain, and I was pretty enthused about what he was doing. And I was sort of not a believer so much in Bitcoin. So I built a wallet. I'm a technologist, and I had started many companies like you, Mauricio, and I don't know which number I was on, number 8, 9. And I said, you know what, maybe I'll just build a wallet for this blockchain. I probably can build something better than anybody, these other things out there. And I did. I built this wallet for the EOS blockchain. It became the number 1 wallet for EOS. And then I was just not that interested in crypto that much at the time. And then in 2019, is sort of because I had this very popular wallet, I was invited to this conference in Bermuda with this analyst named Tom Lee from Fundstrat. And Tom is, one of the best analysts in the world, in my opinion, on Bitcoin. And I had a chance to hang out with him for a weekend, in Bermuda. And, I was like, Tom, so where do you think this Bitcoin's going? And he's like, $1 million. And I'm like, $1 million? It's $5,000. You 5,000, $1 million, how's that possible? If you told me 10,000, I would say, okay, explain me your thesis. But you say $1 million, it seems just crazy. And he's like, well, it's all about demographics. And, every asset class has its demographic sort of cohort. And, the great generation, who fought in World War II, they were kind of gold bugs, and then their children, the boomers, they became infatuated with the S&P 500. And then Gen X, they were into tech stocks. And millennials now, which is the new generation and the biggest of the generations, very big generation. And, for them, this is the perfect asset. And so I really like this argument that Tom gave. And I was thinking about it afterwards. I was like, yeah, I got to go buy some Bitcoin. I got to seriously buy some Bitcoin. So that's kind of how I got in. And, I bought more after that. But I think that was my orange pilling. So I kind of came from a skeptical standpoint. I think I might have deleted them, but I had even Medium posts on why I thought Bitcoin was a bad idea. And, it was going to be kind of the AOL of crypto, or the MySpace of crypto, and there was going to be Facebook that was going to replace it. So, I would say traditional VC view of the world. And then, I would say starting in 2019, I really believed Bitcoin was it. But I got more and more and more and more convinced from 20 to now, really, about that. And sort of my conviction level just keeps on going up. It never goes down, right? One of the things that really convinced me was this ETF, right? Because when I saw the ETF, I realized that we finally had solved the use problem, right? Because we have all these people who wanted to buy Bitcoin before, but they just couldn't deal with wallets and storage. And they also didn't want to deal with exchanges like Coinbase or Binance. A lot of people that I know, they simply are not going to trust Coinbase with their money. They don't really want to wire $1 million to Coinbase. It's just not something they're going to do. They might wire $100 or $1,000 to Coinbase and play around, but they view that their real money is going to be in Goldman Sachs or Morgan Stanley or Merrill Lynch, and for them to kind of go the extra step to, I'm going to move this money to this very untrusted startup-y type thing called Coinbase, it's too big of a jump for them, right? And so when I saw this ETF, I'm like, oh my God. So this is going to totally solve it. All right. This will solve it because all of a sudden, I'm not saying they will want to buy it, but at least they can buy it, right? At least there's a way now that they can go to their regular brokerage account and they can buy it, So I got very bullish on that. And I started, putting a video, I put a video or two out and I got just a tremendous amount of uptake. And I said, listen, I have this rather unique viewpoint because I worked on Wall Street for 6 years as a trader, and in proprietary trading and bonds and in the 80s and early 90s. So I know Wall Street very well. But I also know tech and Bitcoin very well. And I think both of these guys underestimated the impact that this ETF would have. And I still think we underestimate it, right? So I think the Bitcoiners felt like, well, it's not your keys. It's these guys are going to just take your Bitcoin. It's not real Bitcoin. You shouldn't. It's not going to amount to anything. It's not really interesting. And in fact, Lynn Alden and I got in a little online fight because she said it's like the least interesting thing that's happening this year. I'm like, Lynn, I'm sorry, you're completely wrong. It's the most interesting. It's the most important and the most interesting thing that's happening. So that was from the Bitcoiners' perspective, and then from the finance perspective, it was sort of even the most bullish of the prognosticators, people like Eric Balchunas of Bloomberg were like, well, I think high end we could see $15 billion worth of inflows. That would be like an amazing result. Well, we've vastly exceeded that, right? And so I think that they, even till now, they still don't understand what they've got with this ETF. And I don't think Larry Fink understands what he's got. He's sort of thinking, well, I'll do Bitcoin and then I'll do tokenization next. That'll be really big. So I don't think they understand Bitcoin fundamentally. And I think you really have to have both angles to understand it. And I'm just, that intersection of that Venn diagram with, people who understand Bitcoin and people who understand Wall Street is very, very narrow. So these don't intersect much. So I really felt like I sort of raised my hand and said, yep, I have something to say, And then when the ETF came out, I was sort of like, okay, I said what I had to say. I'm happy the ETF came out. Have a good life, guys. And then everybody's like, Fred, we want more Fred. And I was like, all right, I'll stick around a little bit. And then I think the next thing that I really found that was not on people's radar was, as the CTF was starting to roll out, a friend of mine who is an astrophysicist was telling me about this power law thing. And so I, being a math guy, I immediately sort of went through the math and I was like, man, you're completely right. This is, I knew there was some mathematical relationship, but yeah, this is exactly what it is. And so I wrote some about this, and then of course Giovanni, he was like, "Wait, I discovered that back in the day," and I'm like, "Well, how come nobody knows about you?" And he goes, "Well, Plan B got all the attention." I said, "Well, why don't we change that? Why don't let's do some talks together, and let's get other mathematicians together, and let's tell the world a little bit about these theories, which happen to be correct. So I became very much a proponent of the power law, and Giovanni and I and a few other math people have kind of created a group where we sort of share insights and research. And so and that's an area that I'm very, very interested in, that crunch through the data. I keep on crunching through data with a number of groups. I think the group is now 10 people, and includes like Caltech PhD, another kind of IEOR guy named Sina. So the Plan C, who's fantastic. So we've got a group of very smart math-minded people who can crunch numbers, run statistical models, and I think that's an area that I'm very happy to say that I've contributed to the overall understanding of, and I could talk about it for hours and hours, but I think it's something that Bitcoiners really, it's not necessarily completely easy to understand, but I think it's worthwhile going into some of the math, because I think everybody has a model of how Bitcoin works. And the model might be simply, it goes up over time. That's a model. But you can refine that, and the power law is more of a statistical model of what has Bitcoin done up till now, right? And we can be very precise about how has Bitcoin performed up till now. And so I spent a lot of this year, and continue to spend on this power law as well. So that's kind of my journey. And listen, I'm sort of I'm a jack of all trades. I kind of, if the election's interesting, I'll talk about the election. But I'm sort of interested in all things Bitcoin. And as I was telling you before the show, I spent the bulk of this year writing this book on Bitcoin with my co-author, Ben Sigmund. And so we really went into this deep dive on the origins of the discovery of Bitcoin, right? Which is the white paper and the supporting code, right? And so we really have gone into where did these ideas come from, and which part did Satoshi do? What part did other people do? And so it's, as it turns out, when I was in my first startup, or my second startup, I was in San Francisco, and I started this company with a guy named David Fuchs. His wife, Cynthia, was a cryptographer, and she is the original person who created proof of work. And so proof of work, we were discussing proof of work in 1995 with Cynthia in San Francisco. And so proof of work was a solution to email spam problem she presented in 1992 at David Chaum's cryptography conference. Adam Back later rediscovered it in 1997 in a more modern form with nonces, and Adam Back's form, is the first useful form, I would say, for proof of work, and it's essentially what Satoshi used for proof of work. But there's all this chain of discovery that led to Bitcoin, and Nick Szabo played a significant role in it. And so when I wrote this book, one of the people I wanted to send a copy to was Nick Szabo. So not an easy guy to get a hold of. And so, I finally got a hold of him, his email, and sent him the chapter that was related to him and BitGold, and just to make sure I didn't make any mistakes in my analysis of BitGold. And so, and he goes, "Oh, this book looks really good, Fred." And he goes, why don't we write the next one together? So I may write the next book with Nick Szabo. But there's a chapter on Nick, there's a chapter on Wei Dai, there's a chapter on David Chom, and so a lot of these early people, Adam Back as well, and as well as kind of post Satoshi and the block size wars. Mike Hearn, we had a conversation with. We've dove into a lot of the nitty gritty of kind of what took Bitcoin from kind of just the cyberpunk, idea, anti-government, very vague idea, to Bitcoin, And now I'm with another very OG Bitcoiner, Wayne Vaughn. We're doing a conference in Santa Monica called Bitcoin First, and you can read about it at bitcoinfirst2024.com. And so, so I listen, Bitcoin's a little bit my life right now. I love Bitcoin. I'm fully invested in Bitcoin, not 100%. Part of the math there is actually, there's a lot of math to suggest you shouldn't be 100%. That's this Kelly criterion rebalancing math. And so the sort of mathematically, it sort of seems like the correct number is 70%. So it's kind of my preferred allocation, which kind of means that if Bitcoin goes up a little bit, I will sell some to get down to 70%.
Thank you, by the way, for this incredible story that you just told us. It's amazing. I wanted to ask you a couple of things, actually. So you mentioned 70% in Bitcoin. Would you recommend anything else on the 30%? Would it be cash, gold, S&P?
It doesn't really matter. You want something that's not correlated with Bitcoin. So, I think cash is fine, or cash equivalent treasury bills is fine. The problem I think a lot of young Bitcoiners make, and is if you don't have to sell your Bitcoin, if your Bitcoin's in, let's say you're working and you've got some money coming in, and you could be 100% of what you have as investable capital in Bitcoin, right? The problem is a lot of young Bitcoiners, they go in, they are 100% in Bitcoin. Well, then they get in a car accident. Well, the problem is they get in the car accident in March of 2018. And the problem is now they have to sell their Bitcoin at the absolute worst time, right? And so you don't want to be in that situation. You don't want to be in a situation where you're forced to sell at the absolute worst time, right? And, there's all this math and theory and stuff. And it sort of says you need to have some buffer, right? That you do not really want to have to be forced selling. And it even works in stocks. And there's a reason why 60-40 is used as a percentage, 60% stocks, 40% bonds, because if somebody is just living off the asset, they're completely, they have no source of income. You can see that actually you're better off living off of 60-40 than living off of 100% stocks, even if stocks do better, okay, than bonds, because of this problem that you're forced to sell them at the bad points. So I think it really depends on whether you have an additional source of income or, but additional source, it doesn't really matter whether you're working or not. Like it could be a rental property, it could be something, right? But if you have some additional source of income to pay your expenses, then you can have 100% of the rest of your income in Bitcoin. Now, there's also, the Kelly criteria sort of says, there's advantages to having a little extra mathematically, because if it goes down, you buy more, and again, if you're 100% long and it goes down, you do nothing, right? And so you fail to kind of get those dips. So there really is some advantage to having some cash, and so I don't think it's a but it doesn't mean you have to have cash in fiat. You can have Tether, for example. You can have USDC if you don't trust Tether. But it's just, it's good to have some exposure to non-Bitcoin, because as we know, Bitcoin can go down for quite some time. And historically, it's been a couple years, but if you bought in at the peak of the market, you're just now getting back to your cost basis, and November of 2021. Not a problem if you had sufficient cash on the side. You're great. I'm back to where I was. But if you were 100% bought in November of 2021, and then you had to start selling for living expenses in 2022 and early 2023, you might have depleted half or a third of your Bitcoin in that period. So I think you're still better off with some non-Bitcoin.
I agree. Also, I think it takes a few cycles. Like, I think if you can somewhat manage to scoop in 2 or 3 cycles, which is, let's say, 10 to 12 years, well, then it's okay, because this thing compounds 50% average a year. So you just need to let it be, and whenever you need something, you take it off. But to begin with, it would be complete degen to go all in, right? Because like you said so well, I mean, even think about myself, for example. I built a life in Dubai, which I'm not paying taxes when I go in and out, which is super important, because if you are in some jurisdictions, every time you sell crypto for fiat or vice versa, it's a taxable event. So you have to consider also paying taxes. But if you think about my case, for example, I don't pay taxes in that sense, but I need fiat. I need to pay rent. I need to pay the petrol for my car. I need to buy lunch, go on holidays. So having a portion of cash would be, I think, also appropriate, specifically when it comes to volatility. Like, this thing moves up and down like crazy. We have seasonality. There are 4-year cycles. So far, maybe it will change, but so far we've seen seasonality into Bitcoin. So I agree. I think 30%, it's not a bad call, to be honest.
You can look at this as, let's say you have an opportunity, you flip a coin, and the coin has a little bit higher probability of making heads than tails, right? The question is, how much of your net worth should you bet on each toss? Right?
Exactly. Yeah.
Basically, this researcher at Bell Labs in the 50s, Kelly, came up with a solution to this. And it's a very elegant solution. And the solution involves the percentage probability over versus 50%. And so the greater the probability that you have, of course, the greater percentage you should have. But it's never 100%, right? So some of the most interesting things you can get from actually studying, for however long, bachelor's and master's, PhD, whatever. But having studied math and stuff, you get these rules of thumb. And for example, there's even a rule for dating, and it's a fascinating result, which is, how many people should you date before marrying somebody? And there's actually a mathematical solution to that. And you can Google it. It's called the secretary problem or the marriage problem. Okay. The secretary problem is it's a little bit, it's a little bit old school, but that's what they call it. And basically, a secretary is presented a series of candidates. Each guy comes to her and says, "This is my net worth." So the first guy comes and says, "I'm worth $250,000," and she has to decide, either I marry him or I pass. And then the second guy comes and says, "I'm worth $300,000, marry, pass." And she gets to see, let's say she gets to see 100 people in her life, her dating life, right? And then the question is, at what number, how does she decide when to stop? And the answer is, roughly, she should take a third of the people and pass for the entire third. And then find out what is the maximum net worth of that first third. And then the next person who comes across who exceeds that number, marry that person. And it's not actually 1/3, it's 1 divided by the number E, which is 2.718. But that's the number. And it's provable that it's an optimal stopping problem in math. And it's provable that this is by far the best solution for her. So there's sort of a training period where you figure out how much the population is sort of net worth. And then there's the implementation period where you implement the new knowledge that you have. You train the machine, so now you can implement the algorithm, and you marry the first person who hits the result. And it's a little bit like the power law of Bitcoin. We can understand these phenomena, which they look very random. Like Bitcoin price seems very random. Like if you look at it, sort of generally, you say, what is the Bitcoin price? Well, wow, it went up a lot in 2013. Went up from 100 to 1,000. And then it crashed. And then in 2017, it went from 1,000 to 20,000. Then it crashed. And then it went up to 60,000. And then it crashed. And now we're back to 60,000. Well, that's one way of looking at it. But if I tell that to somebody on Wall Street, they're like, this seems completely crazy. Why should I get involved in this at all? There's
Yes.
no rhyme or reason.
Yeah.
Like I want steady Eddie. I want something that gives me 7% a year. I don't want this crash, come back, crash. It's not interesting, right? But if you look at it on a log basis and you start studying it, you realize Bitcoin's very, very consistent. It's growing very much in a logarithmic fashion. And it's growing very much according to the log of time. And it's right now growing at about a 45% compound rate with about an 80% vol. So over the next month, it can do absolutely anything, right? It could be at 58,000 again. It could be at 75,000 again. But if you look at 4 years out, there's a lot of very high reason to believe that we're going to be at a minimum of 200,000 4 years out, and maybe as high as 500,000. So we have this, maybe even higher. But we have some very good statistical behavior that we can estimate based on the past statistical behavior. But it's just not obvious just looking at Bitcoin, looking at the chart, trying to do technical analysis, which is generally garbage anyways. It just doesn't apply to Bitcoin. This is something very different, I think, than anything else that we've seen.
Sorry to jump in. This is super interesting, by the way. How are you planning to approach your, I suppose, DCA out? Like this thing moves crazy volatile, and you said you have in mind to start selling some at some point.
So the Kelly criterion says, for tax reasons, since I'm not in Dubai, right? And the Kelly criterion is the bigger your rebalancing period, the more you're going to allocate to Bitcoin, right? So I'm very comfortable saying I'm not going to rebalance more than once a year, even if that, right? I haven't sold any Bitcoin for quite some time now, like you, right? But, let's say I rebalance and I rebalance either at let's say I rebalance at the end of 2025, let's just say, right? Or somewhere in 2025. I pick a date, August 1st, I'm rebalancing. Whatever Bitcoin is, if Bitcoin is below the point where I have 70%, I don't need to rebalance. If Bitcoin is above the point that I'm at 70%, I will sell down to 70%. And then I wait another year. And then I wait. Okay, is it above 70%? Is it 80% now? Okay, well, rebalance down to 70. So it's a very simple, the Kelly criterion is a very simple model to implement. You just do it once a year and you rebalance. And that's roughly how fund managers tend tend to work anyways. They tend to have different asset classes, and they look at the winners and they rebalance out so they don't have too much of any one thing, you know.
I like this because you basically label with a mathematical term some sort of a kind of what I'm doing at the minute. Like I have a desire cash allocation. I don't actually like stablecoin, to be honest. And again, because of maybe my jurisdiction, right? So I'm more fluid in and out. I think if I was somewhere else, I would probably like stablecoin more. But to me in Dubai, I actually don't like them. I rather hold a dirham or dollars per se, which is more convenient. But as long as I have my cash desire allocation, then everything else is fluid. Like I don't want to hold too much cash because cash is destroying itself. I want to have assets. When it comes to assets, Bitcoin is the top of the list because it's portable, divisible, what we all know, as opposed to I do like gold. I am planning to have a small position by the end of this bull run into gold, but a really small allocation, mainly for a vibrational perspective. I think holding gold is like, I don't know, I like the idea, but nothing jewelry specifically, like an old brick, old school.
I've owned gold now for 30 years. And I got to tell you, it's interesting because I bought gold in 1990 is when I bought gold. And I bought gold at around $200, right, an ounce. Now it's $2,500, $2,600 an ounce. So I bought it $200, $250 an ounce, right? So gold has gone up 10x. My gold has gone up 10x in the period that I bought it. And one of the advantages of holding physical gold is it's tough to sell it. So it's not like Bitcoin where you're sort of tempted to click the button. When you have the physical gold, you're not going to sell it until you finally reach the point where you just have to sell it, or so physical gold is okay. There's a lot of math behind the power law of Bitcoin versus gold, and Bitcoin is pretty much outperforming gold, and in the same way that it is outperforming fiat. The power law versus fiat is 5.7 power. The power law versus gold is 4.9 power. It's almost performing at the same power, gold versus fiat.
Wow.
So gold's not that much of a hedge, really. You think it is. You think you're diverse. I think one of the the problems that everybody has is this over belief in diversification, and it's something that has been sold to us by the financial planning community, but it's and I think there are Bitcoin versus gold. That's one. Not a lot of people who are Bitcoiners do tend to diversify into gold. I think that's probably a good thing. It's more gold people who tend to go into Bitcoin, right? So I bought my gold obviously way before Bitcoin was invented, right? But other people who are gold bugs like Larry Lepard, actually have discovered Bitcoin, and they've sort of moved 50-50 or close to it, So other ones, obviously like Peter Schiff, just have resisted. They've resisted. Yeah. But I think the other thing is, there's this belief that you need to diversify in crypto. So, there's a lot of people who believe that, well, I can't put all my eggs on Bitcoin. I have to put I have to go 50-50 ETH in Bitcoin. And I think it's a huge mistake, but not a terrible mistake, because even if you have 50% Bitcoin, you're going to do fine. But it's suboptimal. I don't think you're getting anything by diversifying into Ethereum or Solana or any of these other coins. I honestly think it's a negative. You're wasting your time, and you're in the end you're going to have suboptimal returns, in my opinion. I'm not sort of massively against these things, but I just think that you're going to underperform Bitcoin because ultimately, the reason I say that, let's just take the very long term, right? So what is Bitcoin really? The addressable market for Bitcoin is money, right? It's money and fixed income. So it's all of bonds, it's all of money. M2 in the US, the same in Europe, the same in China, everywhere else, right? There is, $100 trillion plus $200 trillion worth of bonds and M2, right? 200 trillion. So we're at a couple percent of that right now. If you look at world assets, including real estate and everything else, there's like 900 trillion. So Bitcoin's 1 trillion. So it's just a tiny part of its addressable market, right? Now, if you look at the addressable market for things like Solana, Ethereum, you name it, whatever new one comes, and there will be new ones every month. There's going to be a new layer one of some kind. We have no idea who's going to win this fight. It keeps on changing. Is it Ethereum? Is it Ethereum layer twos? Is it Solana? Is it Sui? Is it Apta? I don't know, right? But all I know is that market is a much smaller market than the market for world money. That's a market for, a distributed database layer for smart money. That's it. And to me, that's maybe the total addressable market for that's $1 trillion or a couple $1 trillion, maybe. But to say that Solana is going to be Apple Computer is an enormous stretch, right? Like, it has massive competition. It doesn't have a business model. It's not clear that they're going to be able to extract the kind of money that Apple Computer can extract. I think these are interesting, but they're much, much smaller. They're much smaller markets than Bitcoin. Much smaller. So I just don't think that you're even in the same ballpark. I think something like ETH is currently worth a quarter of what Bitcoin is worth. I think it should be worth maybe 1% of what Bitcoin is worth. Like that. That's how overvalued it is, in my opinion. I just think that these are not really good hedges to Bitcoin, and there's only one cryptocurrency which could compete in that area, which is Bitcoin. Nobody is going to compete for world money other than Bitcoin. It has no competitors. And the Ethereum guys who think that they're going to build, ultrasound money that, has smart contracts, it will not happen. Nobody's going to be using Ethereum as the world money, in my opinion. It's not sufficiently decentralized. It's not sufficiently secure. It relies too much on validators and committees, and nobody's going to trust that money. The Russians will not trust American validators. The Americans will not trust Russian validators, and we're going to be in an impasse. It can't become world money. I think Russians can trust Bitcoin and Americans can trust Bitcoin. We can all trust Bitcoin. Nobody can screw around with Bitcoin. And that's because Bitcoin is that neutral level that, every country, even if they're at war with each other, they could still agree on Bitcoin. That really makes Bitcoin completely unique. It's going to become world money.
I don't even think they compete one another. I think it's like potatoes and rocks, or grapes and whatever, bananas. I mean, now technically grapes and bananas are fruit. It's something completely different, right?
I think if you're talking about deploying real money, not like just gambling little money. If you're just gambling and you want to have fun, go to the gambling table or go buy some meme coin, do whatever have fun. You know what I mean? And maybe it goes up, maybe it goes down. And you're in it for a short period. You're going to gamble. You're going to get out. Fine. But longer term, for investing, for deploying real capital, if you're sitting there going, okay, am I going to really put $1 million on Solana and wait 4 years? I don't know. Like, I wouldn't do that. Like, it's like, I'd be nervous. Maybe I'm going to wait 4 months, but I'm not going to wait 4 years. So, whereas I view that exactly the opposite for Bitcoin. Like, I have no idea what Bitcoin's going to do in the next 4 months. I do think it probably will go higher, but if it doesn't, it wouldn't shock me at all. But I do think over the next 4 years, I think Bitcoin's going to do very well. So, I think you have to have if you have a long-term perspective and you're talking about real money, you're going to inevitably come back to Bitcoin as your choice. And that's why I think you're going to also come to the conclusion that it's probably very undervalued right now. It's very likely that we are going to see $1 million Bitcoin within the next decade. Now, if you really believe that, like I do, it's sort of like the rest of it is sort of conversation. It doesn't really matter. It's like, if we get to $1 million Bitcoin and you've got enough Bitcoin, what do you care? Like, I don't care what Solana does. It doesn't matter to me. It can do what it wants. I'm not going to sit there and bash it too much. Have fun, do your thing. I don't care. You're not going to compete for real world money. To the extent that people want to listen to what I have to say, I'll say, yeah, keep it down to a couple percent of your portfolio and spend the rest on Bitcoin. That's what I would recommend if you have to. And don't trade the Bitcoin, just hold the Bitcoin. And the other ones, go ahead and trade them if you want. I think the hard thing is the holding. That's the hard thing. We are human beings, and we just want to do stuff. We want to make our money work for us, and we want to have this we want to feel that we are still in charge, right? And although it's pretty clear machines are getting better than us at doing almost everything, including math, right? There was this period when I, published my thesis, and I'm like, oh, wow, look what I did, And my brother said to me, he was, not a PhD. He's like, well, Fred, don't you feel like someday somebody on Mars is going to look at what you're doing and say, well, that's just child's play? And I said, well, I don't think so. But now I do think that some AI is going to look at what I did and say, that's ridiculous. This is basic. Doesn't matter. I can do 1,000 times that, right? So I think we have to come to our limits as to what we are as human beings is, it's limited, Machines are going to be able to outthink us pretty quickly. And also, our investment capabilities are overrated as well. We're not that great traders. In fact, we're terrible traders, generally speaking. And we should try to recognize that and trade the least possible. But it's hard. It's hard to have that temperament where you don't want to just go, okay, it's 62,000. I got to sell. It's like, well, it's up 50% year to date. Like, what do you have? What's your complaint? There's no complaint. So
the holding part, it's so damn complicated because in the art of no action, it requires a strong action, right? And like you said, why would I care in buying at 58, selling at 49 when I know that in 10 years we're going to $1 million? It doesn't make sense in my head either. And having a delay gratification is something these days next to impossible to find. Everything is so fast. Even emails are down to a degree too slow, and people don't.
Well, listen, I feel the same way about drinking, right? So I stopped. 10 years ago, I was a pretty heavy social drinker. I love wine, fine wines, whiskeys, all this stuff. I stopped 10 years ago. I don't drink at all. I haven't had a drink in 11 years, actually, Now, when I was telling somebody about, I was like, well, how can you live with this? And I said, well, it's hard. It's hard doing nothing. But and he was like, oh, yeah, it is hard doing nothing. And I said, yeah, but actually it's not that bad. Once you do not drink, it's not true that you miss the drinking. You don't miss the drinking at all. actually you miss even being more sober. I mean, what I like now is being the most awake, the most sober possible. The most cognitive I can be. That's the best. So I love sobriety now. And I can't even imagine being drunk now. But it's the idea of not doing something, which is really hard, right? So do not trade, do not drink, do not be a degen, right? Even though every one of these exchange casino type things is like flashing. It's like walking past a pachinko parlor, and they're like, like in Japan. You said you lived in Japan. They're like, come in, come in, come in, win, win, win. And the ball's bouncing, and it's exciting, And we humans, we like excitement. We like to buy at 62 and sell at 63, whatever. But you have to resist that temptation. You have to sort of resist the temptation to evaluate yourself based on this fiat number, which is anyways kind of bullshit, like if we can say it. It doesn't really matter. What really will matter in the next decade or two is how many Bitcoin did you manage to hold on to? That's what matters. First of all, can you get to one Bitcoin? That's, for a lot of people, that's a big, big challenge, right? Become a whole coiner. By definition, only 21 million people can become whole coiners. It's probably going to be a lot less than 21 million. Probably going to be more like 5 million people who ever can become whole coiners, right? Now there's probably about 1 million whole coiners right now. And if you look at the mathematical distribution of Bitcoin held by different addresses, it is itself a power law. So the number of whole coiners is growing by 1.4 times time, time to the power of 1.4. And the number of people who have 10 million sats is growing by time to the power squared. The number of people who have $100 or more is growing by time to the power cubed. And even that relationship is a power law, an inverse power law with Bitcoin. So there's all this statistical, and by the way, these power laws have a 98.9% correlation coefficient. Unbelievable. Like, you've never seen, it's almost just absolute straight line. Another one that is like this, which is incredible, is like, if you take the log of Bitcoin price, okay, just take the log of Bitcoin price, right? And average out the log of Bitcoin price over 4 years. Do a simple moving average of the log of Bitcoin price, okay? And if you look at that number, it is an absolute straight line measured in log-based terms. So the average of the logs is a complete straight line with 99% R squared. So you look at this Bitcoin behavior, which I described as, wow, it goes up, it goes down, it crashes, it waits for 4 years, it's dead, oh, it comes back. Now you look at it, you average it out over a 4-year period, you look at it in log space, and you get a straight line completely around the straight line with 99% R squared. Like, you would say, to a normal person, you would say, who understands, had one statistics course, and you'd say, that's not possible. How can an asset have this kind of very deterministic price behavior? And the reason it is that Bitcoin, the story of Bitcoin is a very simple story that once somebody gets it, they like it. And the story is very simple. You can take your money outside of the financial system, you can hold it for a certain number of years, and then you can use it anywhere in the world. That's the fundamental value prop. And when you take it out of the financial system, the government can't get it, and the government can't debase it with inflation. So if you live in a place where there's inflation, doesn't matter. You've now escaped inflation. If you live in a place where the government can break down go into your bank account and just seize your bank account, well, you've now evaded that. That's a fundamentally great product market fit. A lot of people say that and they're like, yeah, I like that. That's a good idea. So you're saying to me that I can take my money, I can hold it myself. The government of Nigeria can't come in and confiscate my money. Great. I love that. And you're also telling me that the government of Nigeria can't devalue the currency and make my money worthless. I love that too. So you take those two things and you say, oh, and by the way, I can leave Nigeria and go to South Africa or the United States with my money or give it to my daughter and she can use it in 5 years and it's going to potentially be worth more. Wow. I love that. It's going to have more purchasing power. This is a perfect product market fit. This is like, people are like, what's the use case? The best use case in the history of use cases. There's never been a product as good as this. This is the best product in the world, right? It's better than a great car. It's better than anything. It's like, you put your money in this thing, you take it out of the system, it grows in purchasing power at a 40% IRR over 4 years. It's fantastic. This is like, you've invented the best product in the world. And that's why more and more people discover this product, and it's worldwide. It doesn't matter whether you're in Dubai, China, Europe, or America or South America, it doesn't matter. Everybody who discovers it likes it. And so now it's a question of how many people discover it and how many people with assets discover it. So it's not just strictly the number of people, it's the number of people weighed by how much assets they have that matters. So some people are like, well, Fred, it's not just the number of people. It's also people like Michael Saylor. Sure, there is a distribution of wealth, right? But there are rich people in Nigeria, there are poor people in Nigeria, there are rich people in the US, there are poor people in the US. So it's sort of a weighted number of people who adopt it. That adoption is growing more or less like a virus. And we just went through COVID, so we know what a viral growth is like, right? This is a little slower growing virus because you have to figure out self-custody, you have to figure out ETFs, you have to figure out what Bitcoin is, you have to get over the fear of this new thing. But once you get over it, once you do it, you start telling somebody else. Yeah, and it becomes, it becomes a viral, right? And that's comes in, right? And I was actually just talking to a guy yesterday who was from Egypt, and his family happened to buy Bitcoin right before the Arab Spring, and they did well, right around very early in the I think 2011 or something like that, and other than that, all their properties were seized and something by the government, but they had this Bitcoin that kind of saved them, And I think that, of course, they're now complete Bitcoin advocates, because that one investment sort of saved their family, right? But, it is a virus, and that virus is spreading very mathematically, and it spreads regardless of the price of Bitcoin, right? So the adoption is continuous, whether Bitcoin goes up or down, doesn't matter. Like, there's always some new person discovering Bitcoin. Doesn't matter. Bitcoin goes up, some new person says, what is this thing? It's going up. I heard about this Bitcoin. Bitcoin goes down, doesn't matter. Somebody says, maybe it's a good time to buy Bitcoin. So the adoption happens regardless. And it's just a train that can't be stopped, in Lynn Alden's words. So it can't be stopped. We're on this journey to Bitcoin adoption, which is going to end in Bitcoin becoming the only world currency. It's going to become the world currency. This is what's going to happen. So we are all going to be using Bitcoin, whether you're not going to be using dinars or euros or dollars. Eventually, you're going to use Bitcoin. The best technology wins. This is the best technology. It will win. And it won't be Solana either. It won't be Ethereum. It'll be Bitcoin. And so, Solana might be used to move some of the Bitcoin, maybe. Maybe it'll be JP Morgan chain. I don't know. Maybe it'll be BlackRock chain. I have no idea how. Maybe it'll be BlackRock self-custody app. I don't know. But I do know that the unit of account is going to be Bitcoin. And so I think in that world, Bitcoin is going to be something like $10 million a coin. And that world's coming in, probably towards the very end of my life. But, at $10 million a coin, I don't care. It's sort of irrelevant, I think if you're a young person, people are like, I missed the boat. No, you didn't miss the boat at all. You're in year 15 of a major revolution. You know what I mean? Like, imagine being in year 15 of the internet, okay. You missed the boat on the internet? No, you missed the boat, so like, I think we're very early. I think we're going to go really higher. I think it will totally become it'll become the standard, and it'll become so much that people will think it's odd that people use these currencies like the dollar. I think we're going to get to that point, but but how we get there, I don't know. It's like, do we get there in an easy way? Do we get there with, collapse, strikes, World War III? I don't know. I just don't know what the path to getting there is. But I do feel like Bitcoin is a complete inevitability, because whether things go the good way or the bad way, people are going to want those lifeboats. And the value of a lifeboat, if you're on the Titanic and you can buy a lifeboat, the value of a lifeboat is infinite. It's everything you have, right? So you don't sit there and bargain with the guy who's got the lifeboat. So I think the lifeboats it's an incredible opportunity right now for especially young people to buy some Bitcoin. They can get to a whole Bitcoin, that's great. They get to a tenth of a Bitcoin, that's great. You know what I mean? But they should try to get some Bitcoin right now, I think. And try to ignore the price variation. That's the hard part, but they got to try to do that. And that's one thing we can kind of teach them as a little bit old OGs. We can tell people, listen, we've lived through it. It's going to be okay. You're going to have some pain along the way. It's going to be great, but just don't get greedy, and just and just try to get as much Bitcoin as you can. That's kind of like, that's probably the best advice I could give somebody. Mauricio, thank you very much for having me. I really enjoy you and all these other Bitcoiners. I think there's some great, it's a great group of people who've kind of figured this stuff out. And, I think we're kind of, we're all over the place in different thing, but we all have this in common. I think we have this common love for Bitcoin and for what it can do. Just keep on spreading the word. And if I run into you in real life at a conference or something, hang out, say hi to me on Twitter or on YouTube. I'm on a little bit on both of those platforms. But I hope you enjoy your Bitcoin journey, and I hope you don't sell your Bitcoin. That's my advice.
Nice. Thank you, Fred. It's been a pleasure. Speak soon.
Yeah. Thank you very much.